Good morning. Welcome to the webinar. I'll turn this over to Skipping Stone Chairman and CEO, Peter Weigand.
Thanks, Nancy. The market department has written for me a little spiel to give, so I'll give it. The Skipping Stone is a global energy markets consulting company in the technology and market entry business. Opened our office in Tokyo a little over 6 years ago, and we've worked with both Japan clients and over 15 companies entering the Japan market. Well, this thing goes on for like 10 more pages. All right, let's just kill it right there. You know, marketing can scold me later. So this is set up to where Hiroshi is going to talk first to kind of lay the foundation of how the market works, some of the basics, and then kind of get into some of the metrics around pricing and some of the basic analytics that we have for you to talk about. And then I'm going to go second. So with that, let me turn it over to Hiroshi.
Thank you. Hi, everyone. Good morning, good afternoon. I'm Hiroshi, Midnight Tokyo. Good to see you, and thank you very much for joining today. As you know, since the full liberalization of our market in Japan 4 years ago, a lot of opportunities have been created and still more coming. So today, I'd like to discuss some basic summary about this fast-growing market in these areas. So let me start with the market size and structure. According to the state's data, Japan's total power demand was 877 terawatts last year, which makes Japan the fourth largest power consumer in the world. And it will be the world's largest liberalized electricity market. In the dollar value, the market is said to be about 140 billion US dollars. You can see the little map on the right. Is a map coming? Here we go. Japan has 10 different electric regions, such as Tokyo, Kansai, which is Osaka area, Hokkaido, Kyushu, down to Okinawa. The statistic at the bottom show the demand by sector in 2019. There are big gaps in numbers between utility subsidiary retailers and PPS. That will mean more room for PPS to grow, switching from the utility retailers. This slide shows the flow of the power industry, upstream on the top and downstream at the bottom. At first, METI is in charge to regulate. There are 166 generators and 10 T&Ds, 4 recognized wholesale markets, 684 PPS, 27 balancing groups, and over 76 firms are involved in power trading, including brokers. This slide shows the picture at glance showing how the power industry works in Japan. The large red circle area is the core part of the physical trading. In the center, there is OCCTO. OCCTO works as an ISO. As blue arrows are connecting to all kinds of segments, OCCTO takes very important roles in supervising and maintaining industry integrity of the industry. Generators are increasing power sales through JPX spot market, and PPS are buying more near-term supplies through JPX spot or balancing groups. T&D companies are still under utility groups, but now have to operate independently. They only can do wires, not selling power. Retails. Because of full liberalization, all 86 million customers can switch in Japan. 21.6 million retail customers have switched, more or less 400,000 switches a month. The figures on the left are the numbers of customers each regional utility retailers holds. Still a lot. And here's the important thing to remember if you want to do power business in Japan. Regardless to sell to end users or just trade physicals, you must obtain METI PPS license, OCCTO membership, and wheeling agreement with T&D utilities. This is the top 25 retailers as of July this year. This number doesn't include utility retailers. Licensed PPS numbers include low and high voltage retailers, municipalities, and also physical traders. Among those, municipalities are seen as big untapped market participants. Wholesale markets. 4 years ago, JPX was the only wholesale market, representing only 3% of the physical market. Since then, the share has grown to 42%. TOCOM and EX started futures, and OCCTO also just started playing important roles in providing market venues. Over-the-counter is at early stage, but growing steadily. Bilateral, it is METI's mandate to utility generators to play bilateral. To do so, IPPs are pressured to unwind utility contracts to put generation to sell in the spots or bilateral market. The numbers of international trading firms, market makers, and brokers are growing. Excuse me. Next, let me talk about the details about JPX markets. First, spot market, the most actively traded in the exchange. This is called day-ahead market in other countries. Buyers, sellers will submit orders by 10 a.m. a day before for the next day's 30 minutes delivery slots from midnight to 11:30 p.m., 48 slots in total. The chart at the bottom is the historical daily volume of the spot market since 2016. You can see in the chart, it grew more than 10 times in 3 years from 2016. But this year, Corona has tamed the rate of growth. Yet in August, for the first time, one-day volume exceeded 100 gigawatts. And the daily average stood at the record pace of 132 gigawatts, surpassing the historical record of 799 gigawatts a day made last year. Auctions are held 7 days a week and for each 9 regions except for Okinawa. These are other markets held in JPX. Intraday markets like day-ahead market to price for 30 minutes increment, but for 1 hour before of the same day instead of a day before. Intraday market has less value, but more volatile than spot, of course, because the buyers and sellers are basically in urgent situation when they have to buy or sell on the same day. Indirect transmission market, this is the market to price for 2 regional locations apart, transmitting one way or the other. JPX Forward is a bulletin board style and not very active. For baseload markets and non-fossil certificates market, these auctions are held 3 times and 4 times a year, respectively. Those auction results are watched very closely by whole power industry. As mentioned before, OCCTO takes roles of ISO. In addition, it started providing market venues. One has just started, and 3 are more coming, 3 are on the way. The one started is a capacity market. This market is for retailers to pay future capacity for load to be served. The first auction was held in this summer, but results became controversial. So rules and procedure are under review. Transmission markets is still in discussion. There are some issues need to be cleared. If cleared, it will play as basic trading between different regions and should be launched in a few years. Ancillary markets, it is called supply-demand balancing market in Japan. Planned to be launched in 2021. Megawatt will be tied to ancillary in 2022. Current megawatt rule is odd, so not many are using. Under new rules, retailers could be buyer of megawatts to avoid paying spikes or imbalance penalties. Okay, futures, TOCOM and EX. Both list the same products, base load and peak load of Tokyo and Kansai, or East and West, to trade JPX delivery month spot average price for final settlement. There are 4 big differences. First, contract size. TOCOM is 100 kilowatts versus EX 1 megawatts. Secondly, TOCOM lists 15 consecutive monthly contracts. EX lists shorter monthly series but has weekly, quarterly, seasonal, and yearly contracts with cascading features for longer terms. Number 3, EX allows only block trades. For TOCOM, in addition to block trades, you can buy or sell on the exchange open market. Number 4, the majority of TOCOM clearing brokers are domestic brokers. Those of EX are larger Western financial institutions, basically mega banks. This slide shows volume and open interest of power futures in TOCOM and EX altogether. You can see the steady growth. The upper right chart shows the each month volume combined. The red line is monthly volume, 3-month average. You can see the uptrend. Monthly average volume between September to November was 158 gigawatt. TOCOM volume was down in November compared to previous month, but I think it was just cyclical. Underneath the volume, it shows monthly combined open interest. It's also going up. At the end of November, combined open interest was at record of 450 gigawatt. Compared to matured futures market in Europe and US, both volume open interest are a little small, but I think the numbers are very good and promising for a newly listed futures contract. This is TOCOM's data published weekly. The percentage open positions held by categories such as commercial, retail, and trades through foreign brokers. The bottom numbers as of November 27th, they're circled in green. Overseas traders held 10% of longs and 39% of short positions. So I guess foreign traders contribute about 25% of TOCOM power futures activities. There's no such offshore numbers from EX, but I think EX power futures market has also a good mixture of foreign and domestic participants. This is a simple summary picture of Japanese power wholesale market. So JPX and OCCTO provide physical wholesale markets, EX and TOCOM for the financial wholesale. OTC bilateral swaps also regaining ground steadily. Okay, price activities. This is a correlation of electricity prices and fuel prices. You can see the correlation. It is called no secret that the majority of Japanese power generation are depending on imported fossil fuels. And for longer term, the electricity prices are well correlated with cost of those imports. In this chart, brown and black lines are JPX Tokyo prices, and the blue represents Japan crude cocktail. Green is for Japan Korea market adjusted with efficiency rates. So you can see the correlations with those fuel prices and the power prices. However, though, the fuel costs are not the only power pricing factor. Especially in the shorter term, spot prices are more vulnerable to near-term power demand supply situations. The upper chart is JPX Tokyo area price movement from April 2016 to the end of this October. At the bottom is Tokyo hourly temperature for the same period. At JPX spot price, there are regular peaks in summer and sometimes in winter. There are huge spikes typically when retailers face the power shortage because of changing weather, supply demand, or a miscalculation in the balance forecast. Take a more closer look at the more shorter term of those the JPX spots in the temperature. This is a 7-month period from April to October this year. Again, because of Corona, as in other countries, lower commercial power demand made JPX spot price subdued until mid-August at the 10 yen per kilowatt. But when the temperature became unexpectedly persistent over 30 Celsius degree in late summer Tokyo, spot price shot up more than 5-fold from the previous price level. This is an example of the differences between the regions. So this is the price difference between Tokyo and Kansai from 2016 to last October. Most of the time, Tokyo is more higher, but time to time, Kansai become more expensive than Tokyo. As mentioned before, there are 7 other electric regions auctioned separately. So in the future, you might think of some arbitrage. These 2 charts are examples how EX and Tokyo baseload futures contracts will converge to JPX spots delivery month average to settle. The water green line is the JPX daily average price. Yellow is its 30-day moving average. Orange is Tokyo daily settlement, and blue one is that of EX. You can see the longer days to maturity on the left, the more gaps between the futures and the physicals. As expiration gets near, both EX and Tokyo contracts are getting closer to the spot month average and finally converge to settle financially. Overall, the daily spot prices are very volatile, but future settlements are rather steady and smooth. These characteristics will help budget planning easier if you use futures. This is the last slide for me today. This is our 4 curves based on futures prices. There are 4 curves according to both exchanges, settlement as of September 29 and November 30th, both Tokyo and Kansai baseload. Please take a look at inside the purple circle in November 30th Tokyo baseload. I drew red and green horizontal line back to back. These lines are the settlement prices of EX summer and winter 2021 contracts on that day. Well, it happened to be the same settlements at 7.5 yen. As I mentioned before, EX has a shorter series of monthly contracts, but for longer terms, those 2021 seasonals were traded and open. So I put them on the curve because I thought these are good indicators for longer term for curves. There are more than several fourth curves calculated on the mathematical methods using data like merit order, historical prices, temperature and weather, schedule of generation maintenance, and even political directions. Well, no one can prove it if they're correct or not at the moment, but I believe the future contracts, at least when it was traded, no matter how the both buyer and seller calculated, it is real and convincing because the buyer and sellers have agreed on the price. and the traded price would go public and mark to market every day. Transparency is a very important factor in the free market economy, and mark to market is a key element in managing risks. So it is very blessing that they have started Japan power futures, and they're growing. And I believe they will continue to do so to assist Japan's power market's growth. That's it for me. Thank you for watching. Now turn to Peter.
Thank you. That was very interesting.
Oops.
Okay. So my first slide talks about the opportunity. I look at, and we've been involved in every market that you see here and probably some other ones. So on the maturity curve, EU, UK, certainly US are past the maturity date. Not to say there's not opportunities in these markets. Obviously there is with renewables and so forth and so on. But Japan is coming up this curve pretty fast. If you think about, it's only been a few years since this thing got launched. It's been a steady march. Even as Hiroshi went through his slides, we gave this similar what's going on in Japan beginning of this year. And there's a whole lot of things have changed, even in 2020, even with COVID. So over the years, I hear a lot of people say, I'm waiting for something, liquidity, transparency, pick something. So now there's enough international players. A lot of them are saying, well, just put in the blank forever, because many of them are happy without the people coming. It's kind of like California, please don't come. So with that, we'll move into what's coming next. So I've split this up by sector. So I think everybody's aware there's a new prime minister, and he's announced his big initiative around zero emissions by 2050. Huge goal. If you go back a few years, Japan entered the Paris Accord, and Prime Minister Abe had a lot to do with getting that done. And they've been struggling to meet even that goal, much less a bigger goal like this. This, of course, has got Medi and the Diet, scrambling to figure out how to do this. That's very aggressive. We'll talk through the rest of this. One of the things to get there is nuclear. There's no way, according to our back of the envelope, they could ever get to zero without putting at least a bunch of the nuclears back on. 4 years ago, they announced a goal to have a 20% nuclear supply back online. That's never happened. It's 9 is as much as they've got now. I think the government's be a lot more aggressive on getting them back on. But a lot of them have been stuck in court and local resistance and you name it. Whether they pass the test or not, they're not on. A big deal in Japan, more than any country I've ever been involved in, is disaster recovery. They have more typhoons and weather conditions than ever. And I think you're seeing that globally, but in an island, it really makes a difference. So there's whole sectors doing nothing but disaster recovery around the electricity market. So that's driving demand, as you can see, for storage, microgrids, distributed energy, grid edge, that kind of thing, as opposed to the big centralized power plants, although they're doing those too. Transmission upgrades, we'll get into a little later. Wind, that's like everybody knows offshore wind. That's kind of a duh, offshore wind. However, there's no transmission offshore. So that's a big challenge. The Diet passed a law this past April 2020, that allows for private transmission ownership. So for the mega funds that have infrastructure money to put into things, this is a great opportunity because they're going to do offshore wind. Hydrogen is relatively new. A big group was formed around hydrogen. In fact, Friday, the Prime Minister announced a $19 billion fund from the government to push hydrogen. He wants to do not just the hydrogen for electricity. He wants planes and cars, and you know, it's kind of interesting we could do that. I'm not familiar with hydrogen airplanes, but we'll see. So then there's Medi, who, fortunately, having worked a lot of markets, having one regulator has its pros and its cons. They get more done over time. It seems slow because governments always seem slow to me, but it's all in one place, so it does get done. And one of the things I like about the Japan market, if the diet or Medi says this will be done and start on April 2021, like the ancillary market, you can go to the bank on that. It's gonna start on time. A very, very punctual society. So the big deal going on right now is this move from feed-in tariff for renewables to feed-in premium, which is basically a JEPIX formula. It's a JEPIX adder or an adder to the JEPIX market. But now utilities are no longer going to be required to buy the feed-in tariff renewable. Instead, it's going into the market. So all the new stuff, except for homes and little, less than a megawatt, kind of community solar, are all going to be feed-in premium. That's going to change everything in the renewable world, because generators have always just sold it to the utility. So it's been pretty easy. Now they're going to deal with, market pricing, balancing, you name it. That changes a lot around that opportunity. The government Medi has a bunch of subsidies for microgrid and storage, whether that's through disaster recovery or municipal programs. There's a bunch of different ones. I think that's going to actually increase with this net zero mandate. We'll see. Offshore wind, they held their first auction. The second auction, I believe, is this month for the rights to certain sections of the ocean. The players have already lined up in big way. Some of the big international companies have partnered up with Japan major energy companies to pursue that. There's still a lot there. EV adoption, their goal was 50%. I think the prime minister just came out and said we wanted to make it 70% by 2030. That's a major shift. So you're talking charging, different business models around, consumer use of that versus in the battery and so forth. And then part of the increase in liquidity in the wholesale market, this has been a steady march by Medi pushing utility generators especially, to put more and more into the JEPIX market. But one of the things that they found about a year and change ago was, so the utilities have three business units. The T&D wires, which, as Hiroshi pointed out, they no longer buy and sell electricity, they just deliver it. Then you've got the generation business unit, the GenCo, if you will, and the retail co that inherited the tariff customers. And most of the retail co's kind of have provide tariff service, and then they compete on a second level with the rest of the retailers. But what they found was the utility generation company was giving the retail sister company pretty favorable pricing. That's now illegal, and the Surveillance Commission is watching that pretty hard. So now they're watching to see what the generation unit sells power for and tracking what they sell to the retail sister. So now this has shifted to where now the utility generator is incented, if you will, to sell it into the market instead of the sister. That's been a big shift in the last few months alone. So that helps level the playing field, if you will. That fits right into this first bullet in the retail side. Before the market opened for the 86 million odd customers, there was about a 2.5 year period from when the Diet passed the laws to liberalize, and when it got implemented. So the utilities went out and signed special deals with their large users, the high voltage they call it, or we call it industrials, not so much commercial, but definitely industrials. So those are subsidized low level deals. Those are no longer allowed. And most of those deals roll off by the end of this next year. So I think you'll see between that and the retail sister can no longer get favorable deals. This is going to open the high voltage market like we've never seen it before. And that makes me jump down to the bottom point, because most of these CNI, large CNIs, of course, in a new market, have never had to buy electricity, so they don't really know what they're doing. It's often just been a bill paid by accounting or what have you. So we're just beginning to see the broker model that we see in the US and UK markets take off in Japan. It's still very, we've looked at a number of these guys. They don't have the skills or the systems that we have in the US or UK markets. So I think that's a big opportunity for either software and or the broker model itself that we see in these two markets. Municipalities, back up to number 2. That's a big deal. So about 100 odd municipalities went out and got their PPS or retail license. And we saw a few years ago all these announcements, such and such a town was going to start selling electricity to its citizens. Well, by and large, that never really happened, because I'm not very familiar with any local governments that know how to sell anything, much less electricity. No back office, no billing system, no procurement, none of that stuff. Then you saw announcements we're planning to do solar or planning to do storage or get involved in this disaster recovery. But again, municipality governments don't have those skills. So we see a ton of opportunity partnering one way or another on multi-levels with municipalities in Japan. I think this will actually grow. This is something in this next bullet, the migrating from month-to-month variable. Vast majority, especially in the low voltage, well, actually in all markets, all customer classes, have always been selling the month-to-month variable pricing plan, because by and large, they were buying JEPICs. Now that there's a futures market and the over-the-counter market and bilateral markets growing, they're seeing that they've studied the US, UK, et cetera, and they see there's, retailers in these countries are offering 1 year fixed, 2 year fixed, seasonal, variety of products, if you will, price plans. So they really want to do that in Japan, but they don't know how. They never had to. So that's wide open for retailers that know how to do that in the US. Some of the early retailers we worked with, that was always a barrier. Well, we can't do hedge plans. Now you can. Or for the traders that want to provide that outsource, if you will, we'll give us your shapes. We'll give you a product that's a wide open. And then the last point on this slide is retail consolidation. We've seen that heavily, and especially in the US, there's been over 70 deals in the last few years where the big fish get bigger. And but we saw 4 of these deals in Japan in 2020, even with COVID. I expect that number to grow. We know, for example, several of the high voltage market retailers want to buy a low voltage company because it's a different skill set to go out and, sign up mass market customers. So that's retail. Moving on to wholesale. I think Hiroshi covered this. Liquidity is just going up. We've seen a number of traders come in to trade financial. The numbers, I think, are on Hiroshi's chart, something like 30 something odd between JEPICs and the EX. I had to go look. We're starting to see more of them become interested in the physical market and trading both sides of that. I'll get into more about that in a future slide on how that can work. We're seeing the trading companies partner with the renewable generators that don't know how to sell the power, schedule the power, balance the power. In the US market, there's also a type of company called a QUESI, Qualified Scheduling Entity. We're starting to see the opportunity for that. that doesn't necessarily trade the power, but manages the physical aspects of moving the power. We covered this one, trading companies providing hedge plans to retailers, a lot more grid edge assets, cogen, microgrid, solar, battery, EV, you name it. This is just going to be a huge growth. And last but not least, of the trade side, there's a lot of gas-fired gen in Japan that got built. If you go back when the nuclear went down from Fukushima, a lot of gas-fired generation got built in a hurry because they had LNG. Now that nuclear is back and the demand for LNG has been dropping steadily, not just from COVID, but just in general, one of the solutions has been to convert the LNG from domestic use into gas-fired. But so I see the opportunity and beginning to hear about, I want to do a LNG for power swap, and I want to tie it to one of the market indicators. We're also aware that Tocom has on its planning scale to open an LNG market in Japan. They currently use their Dubai crude contract as a sort of a mimic, if you will. But we know they're in the planning process to get approval to launch an LNG futures market in Japan. So I think the gas power dynamic that we see in the U.S. especially, somewhat in the U.K., will take off in Japan as another way to trade. Technology. I think I've said at least 4 or 5 times now, grid edge. But it's not just the hardware, it's the software. We've had numerous requests and have done numbers of studies for Japan companies wanting to know what do they use in the US and UK to do this stuff. So they just don't have the software to manage, what they all know is coming, which is I'll be able to use these assets into the wholesale market. So one of the nice things that Medi did was they've already got the rules in place for the storage or what have you to participate in the ancillary market. So that's already in place. I know in the US that rule just got passed this year. And then also the microgrids can also participate. So they're trying to figure out what's the solution to be able to manage that. Market data, this is another one I've heard, as a concern, a transparency issue. So Medi has approved a number of new data access availability that has been an issue before. For example, they just approved in April, in Japan, everything is in April, for the publishing of the outage data for generation and the planned maintenance scheduling for generation is required now. So that's becoming public. That's just another bite of data that especially traders in general for pricing, you need to know. This third bullet is a big deal because of the shift from month to month to hedge products or the number of traders going into physical and the fact that you have capacity, soon to have ancillary, you'll have an FTR or transmission market, it's a matter of time. So it's become more complex. So this ETRM or trading and risk system, there's a high demand for that. We'll talk about one of the keys to bringing technology to Japan, because we've seen some companies make a run at Japan and fail to have ETRM systems. In fact, they don't get any customers. And we'll explain why in a little bit. This next bit for especially, technology for whether it's grid edge, risk management, you name it. The VC funding, 3 years ago, there was one VC that funded anything to do with energy. Today, there's 10 of them. We know personally several of them. They're all struggling to find startup and early stage companies in Japan to have the solutions the market needs because it's new. So of course, nobody in Japan built anything. So there is a way for international companies to get VC funding in Japan. We've seen it. It's a little different model than if you're an American company getting VC funding in America. but there's a ton of money looking for a place to put it. It's a good problem to have. So this next piece is this next gen retail system. As you get into more complex price plans, as you get into the brokering, these are things that systems in the US, UK do now that they don't do in Japan. So we see that as, systems here in the US or UK will do the green, whether that's Rex or what have you. They haven't had to do that in Japan. So there's, I call it the next gen retail system. So that leaves, hopefully, if you've read through that or listened to that or read the slides, a whole lot of opportunities. So I'm just going to put a few of them up here. I just did one slide because I wanted to kill it. So we talked about ETRM, retail hedging, analytics, municipal partnerships. I put two obvious to even highlight is retail and trading. About the only opportunity that really isn't any good in Japan. You don't want to open a consulting company in Japan. It just doesn't really make sense. So no room for another consultant. So let's talk about market entry models and options. So everybody's got their version of the planning stage, the market research. And this is where one of the barriers, if you will, was details. How the details work. In a separate conversation, I'd love to explain to you how we can help you with all that because we've got all that in English, or most of it anyway. So the little difference between the technology player and a physical market commodity, which is either a retailer or a trader doing physical. So either way, you really need to have a presence in Japan, whether that's a corporation or not, with a website and an address. For anybody in Japan to take you seriously, you need that. So then it becomes for commodity side, systems, hiring, so forth, getting your PPS and MEDI agreements. There's kind of two models for getting your PPS license. There's the buy or the build. So the build is form a company, hire a couple of people. We can talk about that process for anybody who's interested. And then you go through the application process, which is kind of like going through due diligence with MEDI. And it takes anywhere from 8 to 10 months, give or take, to get a license. Or you can buy a shell company, if you will, that has all that. And we've done both several times. On the technology side, I can't emphasize enough localize the solution. I'd mentioned in the previous slide a couple of ETRM vendors we're familiar with. They came to Japan to try to get some customers. So their model, it's not just energy, but Japan sees over and over and over again, and the VCs are happy to tell you this. Technology company from UK, US, Europe, somewhere, comes to Japan, they hire a sales rep, they run around doing demos in English, try to get that first customer. And after some period of time, a year, maybe two, they leave because nobody buys it. So, and we've been through this ourselves where we took one software company and that's how they wanted to do it. And we said, okay, it was early in our Japan existence. And what we learned is if you can't show it in Japanese, the assumption is it doesn't work. So they won't buy it. They're happy to have meetings, happy to learn how they do it in the UK, love to learn how you do things. Have no intentions of buying it if you start by showing it to me in English. That's a big, big hurdle. So that's what some of the ETRM guys did. They said, well, go find me a customer, then we'll localize it. And it's a chicken and egg. Can't find you a customer if it isn't localized. So it's a big barrier. It's not easy. We've done it a few times. It takes anywhere from 3 to 5 months to localize even a good sized demo, depending on how complex the software is. So this is the trading participation. Financial is pretty simple. You don't really need to be in Japan. You don't need a company. You can sign up with whichever exchange you want or both. And, But if you want to trade outside of the futures market, derivatives over the counter, that sort of thing, you cannot trade physical. That requires a METI license. It requires an OCCTO membership. It requires wheeling agreements with the different utilities to move power around. And you cannot be a JEPEX member if you're not have a PPS license. So it's very, hard line between which is which. So that's the key difference. We get asked this question a lot. So I'm not going to read all these to you. I'm going to pick a couple. The first one is the Japanese, we see a lot of people say, I want to go to Japan and have some meetings before I decide. As part of my research effort, I'm going to do all this business planning, market research work, but I want to go meet people. And we see this over and over again. They come, they go to a bunch of meetings. The Japanese companies are happy to meet with you. Their view of it is, I'm going to learn what you do, not they're looking to do business with you. For them, it's an education exercise. So if you have to be taken seriously, I go back to, you have to have some kind of presence, website, Japanese presentation, and God forbid you don't bring somebody that's bilingual with you and you do the meeting in English only. So that's one key. Second is translation. We see a lot of people say, well, I can get what I need with Google Translate. Well, that's a misnomer, because we've done, as you might suspect, in 6 years, a ton of translation. Even how they word things in Japanese is not what you would think in the US or UK. For example, METI will say they suggest you do this. They're not suggesting anything. It's a mandate. But if you translate it, it just says suggestion, or even the sentence structures are different. Google can turn them into English, but it doesn't mean the same thing. So, and God forbid you send anybody in Japan something, you use Google Translate, because, or you show them the presentation. They're not going to laugh at you because they don't do that in Japan. But once you leave the room, they will. They go, oh my God. So the next point is, by those that come early, the key is who you're introduced to first. If you're just making appointments, you can get lots of them. That's not a problem. But these companies are going to put in the meeting the person at the company that speaks English, not a high level person, just somebody that speaks English, and they're going to give you their corporate presentation, and you're going to try to get information you need for your business case, whether that's pricing, quotes, that kind of stuff. And they're not going to give it to you because you're not have a presence. There's lots of others, but by being introduced to that English speaking person at a low level, in the future, now you got to convince him to take you to his boss, to take your company to his boss. Then you got to go to the next level. So if you come in at a low level, it can take you a year to get to a decision maker. So that's a critical piece. So let's just go right to the Q&A.
So we have so far received a good number of questions. And Peter, here's one for you. We're a software company thinking about entering Japan. How comfortable are the Japanese using English software for trading?
They're not, period, end stop. If you can't enter a trade in Japanese, schedule if you're doing the physical, or enter a bid on JEPEX, or do a bilateral with a Japanese company, unless you're just doing futures, in which case you don't need one if you've got that. But if you're going to do any kind of trading system in Japan, it's got to be in Japanese. That's just all there is to it. Okay.
Okay, thank you. Moving on to the next question. Are you seeing much arb trading between EX and token? Hiroshi-san, would you like to take this one?
Yeah, ARBs between EX and token. I'm seeing. I heard there's some trade because of even though that they trade the same markets, I mean settlements, JPEGs, but I think the participants are different categories. The European traders, and the other one is Japan, and so they have a different mathematical model for pricing. Yes, that's why there are also some price differences between two exchanges, but that they settle, they converge at the last at the settlement. So I saw some did the arbitrage, but there's some hurdles because the brokers are different, local brokers and European locals. I mean, banks. So many are they have a hard time to open the clearing accounts with those two different exchanges. So if there's someone can do clear those two exchanges, I think there are more be coming to trade apps. Okay.
Okay, thank you. So, okay, next one. We've heard the stories of stories that some of the retailers who entered Japan failed. What can you tell us about that?
That's probably a question for me, or at least I'm promoted it.
Yes, I think this is definitely a Peter question.
Okay. So probably two reasons. One is a fairly well-known case, I guess, at least to me it is. The company came in as a US retailer. Most of them have been from US. And they were focused on low voltage or mass market. And the most common sales methodology in mass market is still door to door. You just explain it to people because they've never switched before. And they decided to go with a vendor who was lowest price by a lot. And they got in trouble because that vendor went out and represented themselves as being from the utility and signed up a lot of customers in a hurry. And let's say the customers weren't happy, Medi wasn't happy, and that's actually a crime in Japan. And so that caused that one to go under. Good company, good people, smart. They just picked the wrong sales vendor. So the other one, because there's really only two, basically tried to run as much of the back office as possible from the US and minimize the amount of staff in Japan. So in Japan, they only, they used a balancing group, it's not uncommon, but they had like 3 people trying to build a 100,000 customer business. And it just didn't work, not just time zone wise, but language barrier wise, to try to do that back office work in Japan. I'm not talking call center, I'm talking the billing and the operations and the scheduling and all that kind of supply. It just was a struggle, not just for the Japan company, but the people in the US were working a different shift. Were frustrated because they, tried Google Translate and couldn't get that to work. So they just didn't commit to having an operation in Japan. Those are the two primary reasons.
Okay, thank you. So next one, do you think the JPEG's volume will keep growing? If so, what will drive that growth? And for this one, maybe Hiroshi-san first, and then Peter.
Oh yeah, definitely. I see. I see that my presentation in uptrend is still under the Corona environment, still making new highs in the volumes, and like Peter said, the MIT is kind of forcing the suppliers go through JPX, and from a month to month, the pricing model and FIPs come in tied to JPX price, and renewables, more renewables coming to the market, so they're going to use JPX. At the same time, again, if there's arbitrages between from futures, definitely they're going to use the wholesale, the JPX market, and then hedge against use the futures. Yeah, so those factors definitely will drive the JPX volume more and more, and it's still 40%. You're gonna go like 60-70% of the whole market could be in a few years. Could be.
I think you covered it. Let's move to the
Oh.
next one.
Okay, next one, let's see. I've heard it is a pretty big investment to enter the Japan market. Can you share what others have invested? Peter, this is yours.
So let me break it down between the commodity players, retail and wholesale, and the technology companies, because it's a very different dynamic. So it depends on how aggressive and fast you want to go. Some of the retailers have come in. I'm not going to hand out dollar figures or yen figures because we have confidentiality agreements with everybody, but you can come in, despite the one company that started with 3 and tried to put them all in the US. You can come in with a steady crawl, walk, run kind of an approach and build it out over a couple of years without, because no matter what in retail, you just start with losses because you start with one customer and it takes X number of customers to where you're cash flow positive. Trading companies are actually a little less expensive to start because you don't have all that back office you do in a retail. You don't have all that customer acquisition and call center, all that stuff. So it's actually a little less expensive for a trading company. I'll say on the physical side, the financial side, that's pretty cheap, pretty low cost to do. It's not any different than any other exchanges. The technology is different. We see some that, we actually turn these down now. We just want you to go find us a customer and then we'll commit. That same story I was telling earlier. We just don't do it anymore. So there's a commitment there of at least localizing the demo. And depending on what the system is, we've done that in 2 months to 5 months, depending on how complex it is. And it's a slower process. Selling technology is a much slower process. So the patience to get your revenue going takes a while. The sales cycle is longer. So that's kind of, it's technology is patient money. Let's put it that way. So range wise, it really depends. I've seen it all over the map, to be honest with you. Okay.
Okay, thank you.
One of the ones on the registration asks, is there a frequency regulation market? Can utilities own storage resources?
So the frequency will be in the ancillary supply demand balancing market. That starts April 1st. They've already been testing it since early this summer between utilities, and they keep adding utilities to go through the beta side. So that's yes. Utilities owning storage, not the T&D utility. So you have to think of the utility as which part, the retail piece, the generation piece, or the T&D piece. Retail and generation, yes. T&D, no.
Thanks. Another question we have, I think this one is going to be for Hiroshi. If we want to trade in the physical market, how open are the Japanese trading houses to enter trading partner agreements and trade with foreign companies?
Well, at first, the trading companies in Japanese called Shosha, they've been internationalized for 100 years. So, and they're still, they're open for international trades. That's no problem. Like Peter said, they have, Japanese speaking, which is, standard. And as we mentioned before, but you need multi-license, OCCTO, membership, and those things you have to have, and also you have to have Japanese presence. You can, like Peter said, you could come in, we have meetings, but they want to see face to face, but better have some Japanese. So bring some Japanese or have appoint someone in Japan. Actually, they're open. What I mean is very open, but better have Japanese.
Okay. Let's see. This, I guess, Peter and then Hiroshi, y'all can both weigh in on this one. One of the things we're concerned about is the lack of transparency and data. What's going on in this area?
Well, I think I covered it a little bit with MEDI opening up more and more data. So there's more generation data. There's also one of the world's largest analytics companies has built a database full of Japan data into a usable platform, because it's one of our projects. Then there's more weather data companies getting involved. There's some now, but there's more of them in the whole forecasting piece. So the data transparency is a lot better than it was, say, 3 years ago. It's not 100% there. We're working with OCCTO and MEDI on releasing the OCCTO data on a schedule, working through sort of the PJM model of some things you release in 90 days, some things you release in 30 days, etc. So I think that's going to happen, especially once the ancillary market gets going, because that data is going to be required. And one of the things that came out of this capacity market, where it cleared at 1 yen below the cap, which didn't make, well, it made generators happy, let's put it that way. It was partly because of the lack of data. That's how the bidding. So I think one of the changes they're going to make is better access to data. So I would put it on a scale of 4 years ago was very little. Today we're maybe halfway there, with the intention of getting as transparent as the US or UK market in maybe 2 or 3 years.
Okay. Hiroshi, did you have something you want to add to that?
Yeah, I think Japan is more open for the data. You can get online, and you can research. And even Japanese, sometimes it takes time to get what you want. But if you spend some time, you work on it, you can find it, or just make a phone call to those ministries. But if you read Japanese, many are issued in English, in converted to the English in Excel, but a lot of them is still Japanese. So if you find it, if you're lucky, you can find it, but sometimes it's hard to translate, and sometimes the data translate in English might be delayed, like 3 months or 6 months. So again, you can assign someone to find those information to Japanese to find and translate it for you. That's the key, I think.
I think we could do one more, and then we'll have to, I think we've held everybody for the hour, and people have other work to do. So let's do one more, and then we'll close it up.
Okay. This is asking about marketing activity. What works, what doesn't, how to source legitimate marketing partners, that sort of thing.
So I'm assuming that's coming from a retailer standpoint and probably from a mass market standpoint, as opposed to a CNI. So what works in the retail sector, in the residential sector, by and large, is still door to door. Because if you go back in the early days of UK, US market, people didn't know how to switch. They had all the usual questions, like, you're going to replace my meter or that sort of thing. So they require somebody to explain the basics to them. So that's still face to face. So door to door works. There's a number of companies that do that, or we've seen model where Some companies have said, okay, we're going to hire and train our own door-to-door people. Especially when you get outside the major cities, there's not nearly as many door-to-door options. Telesales has worked pretty well this year because of COVID, but not because it's telemarketing. It's because people are all home. I think that'll go back to what it used to be. Then the other popular model is partnering with channels, where you get a company that's got a customer base or a sales force that sells something similar or related, and you partner up and you put a bundle together, whether it's telecom or insurance or something. So their sales force goes out and sells your electricity. So we've seen that work pretty well, and door-to-door works pretty well. Those are the two, probably the main criteria. There's plenty of vendors. I think finding the good ones, because it's like, I don't know the US market better than the UK market. There are several door-to-door companies that are maybe less than reputable in the US that will get their retail customer, if you will, in trouble from their door-to-door practices. And those exist in Japan too. So it's just a matter of careful due diligence. That's really no different than the US in that respect. So with that, I know there's a bunch of questions we didn't get to. So as Nancy said at the beginning, either Hiroshi or I will get back to each of you and answer those. Happy to put together private Zoom calls to chat about things. And again, thanks for spending your time with us, and have a great day. Thanks.
Thank you. Bye-bye.